Hey, welcome back to the Hub channel. This is the new high probability short-term live trading with Mike Wade, and we have an amazing show today. As always, we are in the midst of earnings season, and being that we're in the midst of earnings season, we're going to be doing a market review. I don't know if you guys saw this or not, but the S&P 5,000, just like this says 5,000. Last show's trades, we're going to be going over those, love and align. And then we're going to be talking about Mike's sniper guidebook giveaway, his current live trade. And if you have any stocks, go ahead and put those bad boys in the chat right now, and we'll try to get to those and let Mike take a quick read on those charts. But let's go ahead and bring Mike in here. Mike, if you don't know him, he is the founder of Michael Wade Trade Coaching. His trades have been crushing it. His trading style is fast, and it's high probability, just like we say. And I love the way he trades here. Mike, how have you been over the last week, and how are things looking in the market?
Yeah, it's been busy. The earnings season is on, and every day there's usually 3, 4, 5 potential trades we can take. It's been fun. It's been busy, and we're making some money, which is nice. We're sharing it with other people, which is even nicer for me. So everything's good, man. It's always a pleasure to be with you, Brandon. I really enjoy our time together. You know, Brandon, you mentioned it. The S&P 500 neared almost like 11 points, 0.11 away from 5,000. And it's crazy. Who would have thought, man? High
Yeah.
interest rate environment last year, the markets were tanking, and then boom, all-time high territory. Many all-time highs recently, and we're bumping up against this line in the sand called 5,000. A multiple of 5,000, a multiple of 1,000, and those levels tend to be really strong. So the question occurs, of course, is where does it go from here? And I saw this bit of news this morning that I hadn't seen yet, Brandon, and we've got a little clip here. But Walt Disney came out with earnings. We're going to go after Walt Disney this morning. And what I found really interesting was that Walt Disney's revenues increased a little bit, but their earnings per share, their net profits, increased proportionally more. And that is a really good sign of bullishness. It's a sign that inflation is cooling off, so the expenses are dropping off. So Disney's making a little bit more money than they made last time, but they're making a whole lot more profit. And that circumstance is across the market. Half the S&P had reported fourth quarter results as of Tuesday. Earnings had climbed 8% from a year ago, while sales only 3.2%. A lot of numbers, but what does it mean? It means things are getting cheaper and companies are making more money, more net profits. And that's a sign that the interest rate cuts are working. And now now the markets are going to sort of anticipate what the Fed's going to do with regards to cutting rates. I would say maybe not cut rates, because if companies keep on rising, then we could see other detrimental impacts on the market. So it's very interesting. And Brandon, you mentioned it. Here's a chart of the S&P 500, and that's 5,000 there, and we're just like 11.11 point away. And the question becomes, where do we go next? That is a major level, major. I think that despite all this good news, that we're due a little bit of a pullback. In fact, let's take a look at the futures, CNBC.com. The Dow futures are up a tiny bit. The S&P down a tiny bit. Nasdaq down a tiny bit. So there's a toppiness. It's like all these other traders are looking out there going, well, the fact that earnings are climbing when revenues aren't climbing as much is really good for companies. Earnings have been good, but we're at 5,000. So where do we go from here? I tell you what, Brandon, for sure what's going to happen is we're either going to go above 5,000 or we're going to retrace from 5,000. There you go. You're welcome.
That's a bold prediction in both ways, weatherman. I'll tell you. But I think you knew this too. And Walt Disney was one of those ones a couple years ago, and Bob Iger there, he put out this massive plan to cut costs, like $2 billion in costs, and he did whatever he could to cut those costs for Walt Disney. And I think that might have played into this, but I think you might have nailed it right on the head there. I think their costs are coming down, but their prices remain the same. So profit margins are higher across the board. Retail consumers are seeing this though. And I heard something yesterday about, Walmart is lowering prices on their retail goods, and some of their costs are coming down a little too quickly, almost as far as inflation. They said that's not good either because that could lead to a period of kind of stagflation and other stuff. Because if things come down too quickly, I guess it gives people false hope and all that kind of stuff in the economy. So I guess we'll kind of see how this plays out. Just like you said, it's either gonna come down on 5,000 or shoot through 5,000. So
I
bold to
joke,
predict those things.
but
Like a leap.
I joke about it. But when we know 5,000 is strong resistance, we can wait and see what happens. So for me,
Yeah.
I say bullishness continues with a solid close above 5,000, maybe two or three closes above 5,000. Let's make sure. If that happens, then I'm more staunchly bullish. And then if there's a pullback, I'm still bullish, but I'll wait for maybe, like, if you look at the chart here, if I would expect if there is any level of pullback here, and I think there very well might be today, that we would drop down to 4,900, and then that would be support and little basing, little digestion, profit taking, consolidation, and preparing itself, basing itself for a next run up. So I was joking about that, but really with technical analysis and just support and resistance, you can use these lines as triggers to tell you where the market may go next with more probability. So I'm excited by this level, and I think my prediction is we'll drop down a bit, maybe to 4,900 base, and then ultimately close above 5,000. Earnings is the thing that drives the stock market most, and that most companies, they had their earnings climb and their sales not climb as much. If that's more broad faced, it's across many companies. So if that's the case, and it seems, then we can expect further bullishness over time. I would say almost for sure. Almost.
Yeah, interesting. Yeah, I mean, I almost interesting take there. Well, let's take a look at what actually happened last trade. We did love and align. Let's take a look at those trades, see how those things played out, so we can get ready for the market's going to open here in about 7 minutes. So let's go over
Yeah.
those, and then I kind of want to dive right into. You said you're looking at Disney today, so let's do that.
Yeah. MICKEYMOUSE. This is
Mhm.
this is our chart of love. Now, love came out. This was a student trade, actually, Brandon. One of our audience members provided this to us, and the stock gapped up on earnings and then proceeded to close. It hit the 200-day average. Let me zoom in a little bit so you can all see this, so I can see it. And it hit the 200, and then this was our line in the sand. And this is the power. I like this example because right here we were losing a bit of money. Last week we talked about it. We were down a little bit on this trade, but we were waiting. We let our rules tell us what to do, and you can see the tails here bounced almost exactly off of our line in the sand, which was placed just a little bit below the 200-day average, which is also support. So it bounced, then had a nice move up. And love will come off this week, probably today, actually, with only 2 days to go. And we're going to nab about, 12%, 11% or so on this trade. Probably today, this comes off. So the thing that I want to really amplify here is rules rule. There's a T-shirt there. Rules rule. You get a situation here where the stock's not behaving like you expected it to do, and then it bounces and bounces. You're down. You're underwater a bit on the trade, and you wait for the stock to close beneath the line in the sand. And if it doesn't, do nothing. Simple. You get out if the stock closes less than the line in the sand, or you can buy it back for 10% for a profit. And you just let the rules tell you what to do. It has a really beautiful impact on trading psychology, because you don't have to get involved with, do I think the stock's going to go down? Do I think it's going to rise? It's going to do what it's going to do. Follow the rules and let the rules, take you out of the trade. And it's a really nice a place to stand while you take on this trading game.
Yeah, that's interesting to look at. I love the way that you read these charts and go over this. With the love trade there, do you remember we put what did we put that on, and what was the profit again?
Yeah, I'll show you right here. I keep everything in
Okay.
Tom's tools. It's
Mhm.
really cool
Okay.
risk graph. So we sold it for 12 cents. We did
Yeah.
five of them. So we netted 60 with a risk of 440. That would give us 13% max profit.
Well,
Currently, the
what I
trade's
wanted
worth. Yeah.
Oh, go ahead. Yeah, what I
No,
wanted to
go ahead. You
highlight here, I'm glad that you pulled this up because this is good, and this is what everybody needs to see is, profit there wasn't a huge amount. We didn't shoot for 100% profit, 200% profit, but it was a short term, I think a low risk, high probability trade, just like you always do, and what do we get? Like a 10% profit on the whole trade? But it was over a
We're going to get
period
about
of less
11.
than yeah,
Yeah, I'm sorry.
11% there.
We'll get
Okay.
about 11%. Yeah.
Perfect. Okay, and in a short period of time, but once you start compounding those profits over the whole year, I mean, it leads to some big stuff. I used to follow a guy that would say, you know what, if you can get 10% a month, that's 120% per year, right? And so 10% per month, I was super excited about that service and what we were doing there. But now you're getting 10% every week sometimes. I
That's the
mean,
average.
yeah, yeah. I mean, that's pretty dang good. So I just wanted to highlight that, and I think that's pretty cool.
Yeah.
So
Thank you for doing that. Yeah.
yeah. Well, now that we got this stuff that we talked about here, so let's set up the oh yeah, okay. So a line there, 33.
Yeah. So
So this one you lost money on, okay?
we did. Yeah. And
Explain.
now we followed the rules and we lost money on it.
Yep.
But with we would have made money had we. Let me just tee up the chart. I would do this trade again, and this is what we were looking at last week. They came out and blew out their earnings and lifted their future guidance. When we placed the trade, the stock was above this 200-day average here. And this right here that happened, there was massive profit taking, which really is, this happens, but it's rare. It's rare that I've ever seen that happen before. Maybe like in the past 20 years, maybe three or four or five times, maybe. I don't look at all stocks, but what happened was their profit taking ensued, and on the very same day, the stock closed beneath our line in the sand, which happened to be 275. So, what happens to a lot of people is when that happens, they go, well, let me wait another day. Maybe the stock will recover. It's either going to do that or not. But for us, because here's the secret to trading, Brandon: manage your risk and let the winners take care of themselves. We could have said, let's hope that stock's going to bounce. It didn't. The next day it dropped a bit. We can hope for that, but this stock could have continued dropping from here. So with an eye on risk management first, let the profits happen as a consequence. This was an exit. Had we ignored the rules in this particular case, we would have still made some money on this trade. So we took this off brand and followed the rules, and we lost, I don't know, it was about $100 on this trade. So we lost. We lost on. That's one of our losers. Typically, we lose 1 out of 10. That's our loss rate. Well, let me say it in a more positive way. Our win rate is 90% over the last 18 months doing this system.
Right. And losses don't really, I mean, they happen in the market and you need to learn how to manage those losses because inevitably you're going to have a loss here. And Mike never says he's getting a 100% win rate. He's just saying high probability, which I've seen that to be true over the past, few months of working with you, Mike. I mean, you have very little losers and your winners definitely outweigh the losers for sure. So
Yeah,
the
I think
market opens here in a minute. Mike, we got about a minute. Let's set up that new trade that you're looking at here. What are we talking about right now?
Mickey We're talking about Disney.
Disney.
Yeah, Disney blew it out. Now their revenues increased a little bit, but we talked about this earlier. And we're off. We're going to look at a live chart of Disney here. I've got it up here. So there's also a
Woo!
graphic on what happened with Disney, and they blew it out basically, and their future guidance was strong. They didn't make as much. The revenue didn't increase as much as perhaps they would have liked, but their earnings did. A good sign of the company. And here's Disney right now. It's at 107. All right. So the trifecta is when the earnings are great and they lift future guidance. Disney's also buying Epic Games, which is analysts love. So there's a lot of bullishness going on. And here's Disney right up here. Zoom in a little bit. So Disney gapped way up here. It was here yesterday, last night, and now it's gapped up to 107. And so now what I want to do, and fairly quickly, is establish a line in the sand. What's a line in the sand? It's a support level in this case. And here's a round number, 100. And if you go back in time, 100 was resistance here, support there, resistance. It was bouncing across the 100 level, the support resistance level. And then yesterday it was almost at 100, and now it's at 107. Now Disney can go anywhere from here, of course. It could continue rising. It could do what Align did last week, and there could be some profit taking as well. And as I look at the activity for the open, I'm not seeing a lot of movement. It's hard to see it, but it's just staying flat right at 107. All right, now the game now is, with that good news, I want to plan for Disney dropping just in case the good news doesn't keep the stock lifted up. And so what I'm looking at here is selling a credit spread, selling a credit spread at 100. And then in the event Disney does have some profit taking, at least we have a really nice line in the sand at 100. Around these round numbers or increments of multiples of 100 or 1,000 are typically really good support resistance levels. And that's where we're headed. Now, look, Disney's just bouncing around here, not moving very much. All right, that's good. It's rising a bit. So Brandon, here's what I want to do. I want to put on a trade that makes money as long as Disney stays above 100 over the next 14 days. What do you think? Do you think there's a good chance of that?
Yeah, I mean, look at it right now. We're talking 108.53, staying above 100. Looks like a great line in the sand. And it's one of those, the biggest, I mean, that's the biggest one of the even numbers that everybody talks about, one of those psychological barriers. So I think I like that trade where things are sitting.
I like it. Now, look, the credit's 7 cents. So what I'm going to do is sell. The way you construct these credit spreads is you sell an option, in this case, a put option, right at the line in the sand, and then you buy the underlying. Now, because Disney is rising quite a bit, let's go back to the Hub chart here. I use Hub Software's chart. Software, the charting is really cool. Look, Disney's starting to rise. And so as Disney rises, the value of this put spread actually diminishes. So it was probably worth 10 cents when I started talking, and now it's dropping in value. It will continue to drop in value as long as Disney rises. So one thing we can do here without getting, there's 14 cents. We got to get that. I'm going to go ahead and just get filled on this, and I'll tell you the number of contracts. Showing 14 cents, that's astronomical. Let me put this order in, and I'll come back and explain it, Brandon. So 14, see now, look at that. I'm going to put it in for 10 cents. See if we can get 10 cents. Confirm and send. And I'll let that sit for just a minute. The prices are all over the map. So I've got a trap out there. And as the price of this spread fluctuates, it was at 5 cents. It's at 5 cents now. It was at 14 cents 20 seconds ago. So the pricing is going to be moving around quite a bit. The reason is that at the open, all of us option traders are coming in trying to buy or sell Disney options, and the pricing is all over the map. All right, I'm going to let that sit for a moment. Now we got it. We got 13 cents in Thinkorswim. Wow. See, you see what just happened, Brandon? 8 cents, 5 cents, 13 cents.
That wasn't a bad feel. I don't even know how you got that feel, to be honest with you. I thought you were going to actually have to raise your line in the sand to 101 and 102, looking at those spreads as they were jumping, especially as it was jumping up there. But that was a really good feel.
Yeah, really. And that's the thing. You ever been fishing, Brandon?
I've heard of it.
You've heard?
I've heard of it.
I used to fish, but I've never fished when there's a school of fish feeding. But when there's a feeding frenzy, which is a sort of an analogous to what's happening here, there's a feeding frenzy on Disney options. So market makers are trying to get these fills, and orders come in, and prices fluctuate wildly, and you can catch a break like we just did on Disney. So Now, let me break down this trade for you just so you understand what we just did. So I'm going to go to this nifty little spreadsheet here that will guide you through the risk management of this particular trade. I thought I had the spreadsheet. There it is. So let's go back to the trade that was just filled. So we sold a Disney 100 put, and then we bought the 99 put, and we got 13 cents of credit for it. Okay, in the guidebook, which we'll talk about here in a minute, we can calculate using simple math what our max risk is and our maximum return on investment. All right, so the width of this spread is 1. How did I get that? 100 minus 99. That's a $1 spread. So the width of the spread is 1. We got 13 cents for that spread. And then from that, we can calculate the maximum risk of the spread, which is quite simple. You simply subtract the credit from the max value or max width of the spread. And so our risk is 87 cents. All right. And if you divide if you divide 13, which is our credit, by our max risk, that gives us a potential profit in this trade of 15% over the next 2 weeks. That's a percentage point a day. We won't be waiting 2 weeks, particularly if Disney stays where it is or rises. We'll be out of this trade probably in 5 to 7 days. So, Brandon, that's really it. Let me show you this, the trade instructions here on Disney for those that want to play. I wouldn't go any higher than 100 on this one. Let me get my expiration date. So these are the Feb 23s. And we sold the 100 put, and we bought the 99 put, and we got 13 cents. If you're not in this trade and you want to play with it, I'd say paper trade this for a while and don't risk real money until you really figure this system out. But I would take 10 cents on this one all day long. So if you can get 10 cents for the spread, then there's still, let me put that in there. You're still at 11% profit. And when you buy it back, you'll net about 10%. So that's the run rate. Our run rate on this system is we normally average out at 10% profit over 8 days with 90% winners. So if you can get 10% with mega strong probability of profit, why not just get on base a lot of times? 10%, 10%, 10%, 10%. And that stacks up over time, Brandon. And that's a good one. I like Disney. I also like the company as well.
Well, okay, so you and I disagree there, but I do like the trade. I think that trade was a good trade. I like where you put that line in the sand, and I think it's a safe trade. One of those trades I think you can be fairly confident you're going to get this trade, you're going to close this trade for a win. And hopefully it's in the next couple days because 10% is, that's pretty awesome. So nicely done there, Mike. Now,
Thank you, buddy.
I don't know if I don't know if we've talked about this yet, but where can people read more about how you trade, your trading style, since you just put this trade on?
Yeah, well, there's a guide that's available to you right below our faces here on the YouTube page here. It's my sniper system. It's a comprehensive guide that takes you I'd say comprehensively through every step of this process. I know there's a lot of moving parts, and there's credit spreads. What's a credit spread? All of the steps, lines in the sand, finding news, everything that I do here is detailed in that guide. And Brandon, it's free. So why not? Read the guide, come to the Thursday live trade show and trade alongside me. It's a little bit fast paced, but man, it's fun, it works, and it can make a difference in your trading life, which is why I'm even doing this. I want other people to participate in this fun game of trading.
Yeah, I love that, Mike. There's one thing. So I really do like this trade that you just put on. There's a couple of let's take a look at one of the stocks that was mentioned here in the chat by one of the people watching right now. ARM. I don't know if you have a chance to look at that since we have a couple minutes left. ARM is the name of the ticker.
I was looking at it this morning as well. Let's pull it right up here. ARM Holdings. It's had some really good earnings announcement. Now, it's a new company. It's in the AI chip space. I happen to know that. but it just got listed not too long ago. But it's joining the AI party, and they blew out their earnings. Now, you want to understand the news a bit, right? So you can go into many places to get news. Yahoo Finance is a really good one, but you can see right here they're talking about ARM. They also give you the stocks that are moving today. Disney's on this list. PayPal is another that could be interesting. ARM, Confluent. These are really good big movers this morning. And then if you scroll down here, let's find it. I'll tell you what I'm going to do. I'm just going to type the symbol in up here, and we'll go right to the news for this particular company, and then we can kind of see. Yeah, here it is. ARM stock rallies on Q3 earnings beat and strong guidance. All right, so this is the perfect news. They beat their earnings, they beat on their earnings, and they issued strong future guidance. Our earnings are great, and they're going to be even better next quarter. That kind of news, and the analysts are loving it. And now the stock is in blue sky territory. I love it. The question I have is, where do I put my line in the sand? Because there's no history really. The only solid line in the sand I can see is at 80. Now the question becomes, and that would mean that as long as the stock stays above 80, we'll generate some profit. But if I go look and see what kind of credit is there, I doubt there's much, given the stock is so far gone already. It's up at 106. It opened here at 94, up to 107 now. But I can look, right? I can go into this is a simulated environment. I can go to ARM, and then I just take a look. I want to sell. Let's get some more strikes here. I want to see if there's anything at 80. So there's 80, and there's no credit there. In fact, they're not even giving credit. You'll have to buy a credit spread, which is a guaranteed loss. So nothing there. So the next question is, well, how high would I go on this? And that we don't have a lot of history makes it a bit risky. So what I would say is the closest you'd want to go is 90 on this one. I do like, though, Brandon, that even after the huge gap up, the stock's running really hard. Lots of volume already. Institutions are loving this. I would expect it to stay below 90, but the yellow flag is there's no history, really. So I would stay away from this one, but let's just check. What can we get at 90 if you were to do this one? And there's no credit there either. So market makers are not expecting it to drop. They're not giving any credit. So unfortunately, that's one I would have to pass on. But the good news is there's tons of them. There's tons of them. I'll take you back to this list you could look at as well. You know, that was right on the Hub Financial, not the Hub, the Yahoo Finance site. You know, if you just go back here, there's a whole list of you can check the news, but there's a whole list of stocks that are moving. PayPal's another one that's dropping pretty hard today. Although PayPal's earnings were mixed. The analysts didn't like the numbers. They actually did have pretty good earnings, but the stock has dropped below the 200-day average for now. Analysts were disappointed, even though the company's not really in that bad of a shape. The stock dropped. So this one I would be interested in, perhaps at 62, which is the 200-day average. But again, that's mixed. I really want to, Brandon, this is probability. I want the news, all the news to be really good, or all the news to be really bad, and the stock moves in the appropriate direction. And then we sell so far away as well that even without the news, we have a good chance of winning. Probability, 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 probability. And if you're patient, you follow the rules, and you take only the sweet ones, the lowest hanging fruit, then you'll probably top out. I can't guarantee it, but you should be running around 90% wins with an average return of 10% every 7 to 8 days. So Brandon, it's there's so many trades, and we're in earnings season, as you said, so there's tons and tons of them coming. So be patient, take the best ones, and just keep rolling.
Yeah, this has been one of the craziest, busiest earnings seasons that I've seen in a while, actually, and some of the biggest upside movements on some of these as well. But ARM, I think, was one that I had looked at a while back, and yeah, I kind of You know, if I was had any interest in the stock market at all, that would have been one that I would have said, oh, that's a no-brainer play, because I think is going to be the narrative going forward here in 2024 as well. Anybody moving to make processors or anything along those lines, I think that's going to be something that everybody's going to be talking about here. But Mike, as always, let's go ahead and wrap this up. But I appreciate your insight. I love your trades, love your trading style even more. If you don't have Mike's guidebook, go get that thing right now. I mean, he's giving this thing to you for free. You can check it out. You can check out how he trades and all that stuff. But next week, we're going to be back here at the same time going over his Walt Disney trade to see how Mickey did for him. But I think this is going to be the safest trade that I've seen yet, given everything that I know in the market here, Mike. But thank you, as always, for dropping by the channel today to help hang out with us. And we will see you next week back here, Mike, and everybody else. Bye-bye.
Bye, everybody.